the comment that I was going to say about Coinbase is I still think that it remains to be the most misunderstood like stock on Wall Street. People who are just like looking at this as if it's, revenue guided, like we exist in a cyclical industry. Like nothing was going on last year. So we're up 100% on the top line. But like we guided to something that we thought would be higher. Nobody expected that, the election would put a curtailing on trading activity. But if you think about this in terms of 4-year or 5-year cycles, it doesn't matter what happens right now when we're going into 2025.
All right, everyone, this is a message for my DGen listeners out there. If you are getting scalped paying expensive fees to perp dexes, I highly recommend that you check out Index Co-op's new leverage suite. Now, whenever it comes to leverage, do your own research. This is not financial advice. Don't bet more than you can lose, all that good stuff. But if you are going to lever up, you might as well not pay an arm and a leg for it. You can get leverage on BTC and ETH with built-in liquidation perfection, now available on Base, Mainnet, and Arbitrum. So click the link in the bottom of the show notes and head over and check them out today, and you'll hear more from them later in the program. Hey everyone, this episode is brought to you by Supra, the vertically integrated L1 for super dApps. They have a very cool new product coming out called Supra Containers. So head over to supra.com. That's supra.com/containers. So if you're building on an L1 and it feels a little bit crowded, or the complexity of L2 and L3s are getting you down, just head over to Supra. They'll get you sorted. Thank me later. Hey everyone, this episode is brought to you by Fuel Labs, who's launching Fuel Ignition, a new high-performance Ethereum L2 powered by the Fuel VM. Now you're going to be hearing all about Ignition later in the program, but for now, what you need to know is they are launching phase 2 of their points program. So click the link at the bottom of the show notes and head over, start experimenting, messing around on Fuel today. Thank me later.
All right, everyone. Welcome back to another episode of Bell Curve. Before we jump in, quick disclaimer. The views expressed by my co-host today are their personal views, and they do not represent the views of any organization with which the co-hosts are associated with. Nothing in the episode is construed or relied upon as financial, technical, tax, legal, or other advice. You know the deal. Now, let's jump into the episode.
All right, everyone. Welcome back to another Roundup edition of Bell Curve. You got Michael's 1 and 2 and Vance. Fellas, how we doing? Vance, very nice hat there that you got. I thought those only came in red.
What's up?
I thought those only came in red.
Not when you're a close personal friend.
This is the Gothic MAGA. I forgot I was wearing this yesterday in the grocery store. And there was one guy who looked at me who was definitely pissed that I was there wearing this. And then this young guy at the counter was looking at me, and I was like, oh, man, I can't tell if you're angry or not. And he was like, that's a really sweet hat. So, there's a lot of love in the room. There's some hate, too.
If you wear that around San Francisco, what's the ratio of like weird looks that you get?
So I was testing Vance this over the last couple of weeks. There's only been one type of driving around San Francisco and kind of different parts of San Francisco. There's only been one type of not protest, I guess, like group of people who are like promoting someone in terms of elections and in campaigns. It's only been Trump supporters. Like you drive past Union Square. I did this a couple weekends ago. Each corner, there's like 20 people with like "Make America Great Again," Trump, Vance, and then a couple months ago, this is a while back, but David Sachs hosted Trump and Vance at his house for a fundraiser. Yeah. And it's like, I don't know, 8 or 10 blocks away from me. And it's kind of up on this hill. And so I went up, to go check it out and see all the protesters and see everybody who, was throwing tomatoes and whatnot. And in reality, it was literally the opposite. And there were hundreds of people who were pro-Trump with flags and, honking horns. And it's been pretty interesting to see that there's like a total about face from what I would have expected publicly in San Francisco. I'm sure there's going to be a lot of, animosity one way or another post-election, but this is actually going to be our last pod prior to election.
Yeah, we're one roundup away.
Just vote, and if you have a problem with the hat, I don't know what to tell you. Just is what it is.
The country has to move on from if you're not on my side, then you're my enemy type thinking in general. I'm just not here for that.
That mentality is the only undemocratic process that I have seen.
Yeah. It's also just, it's not going to work. We are one nation here. You gotta move past it. And I'm optimistic that we're
Sultan.
Did you see actually Trump riding around in that garbage truck? It's been a big week for garbage in the political cycle recently. It's
The one thing that no one can deny is that he is the one of the most incredible showmen just on the face of the earth. And to be able to take also pretty insane that you have the sitting president calling half the country garbage on a Zoom call, but being able to have that come around within 24 hours and him ride to the next rally in a dump truck and a garbage truck. You got Vivek out there literally running a shift with the local garbage collectors in Pennsylvania. I mean, just what an incredible series of events. It's flabbergasting.
very strong marketing move, and just the coordination to actually do that in that period of time. Very good IRL troll. Yeah,
very good IRL troll. Interest of time, should we cover Glow?
Yeah, let's talk about it. You guys want to set the groundwork there for Glow?
Sure. So Glow is an investment that we announced today. We're co-leading it with Union Square Ventures. And what it is it is essentially a network where it incentivizes the production of net new solar power. And specifically, the way that the incentive model works is it incentivizes the production of net new solar in particularly dirty energy areas. And so what you can think about is solar power has two kind of offshoots of the actual solar farm operating. The first is energy, and that energy can either be consumed or it can be sold. The second is carbon credits. And carbon credits are supposed to represent, carbon credits represent the amount of carbon that is being reduced from the energy production in a renewable way. And historically, you've had companies like Apple, Microsoft, Google buy carbon credits to have a carbon offset of whatever they're producing from a carbon perspective. And this could be, we're going to sponsor a portion of the rainforest in the Amazon. This could be, we're going to actually build solar farms to produce more energy. And those carbon credits are actually valuable. There's an exchange where they're traded on. And so the production of new solar is both creating revenue for the energy and then the carbon credit production as well. What Glow does is when you want to operate a new solar farm, you commit that solar farm to the Glow network, you turn over all of the revenue that's going to be generated for that solar farm based off of the energy price of wherever that solar farm is located and how big that solar farm is. And then you get a cut of the revenue that is shared amongst all the solar farms. So you get your revenue, you get a cut of the revenue back, but then you also get Glow tokens as an incentive for producing and then also joining the network. And what Glow ultimately wants to do is build the largest network of solar power in the world. And as part of this investment, we are also building a number of solar farms in Rajasthan, India, which is in the northwest corner of India, pretty close to Pakistan. It's definitely, a high carbon credit production area. And therefore low energy cost area. But India is kind of a great case study in this, where about 1% of the energy mix right now in India is solar, and they have a mandate in the next 5 years to turn that actually from 1 to 25%. So there's a lot of incentive and a lot of government initiative to provide more solar. But with this, we're going to be a large operator of the solar farm as well as investing in the protocol. And the ultimate goal is to build the largest network of green power and have that be incentivized and adjudicated by a network.
Yeah, I think the other stuff to add is it's a very regional game. And like what Glow is like this big global game for solar as a service where you can mine crypto with solar. And some people are calling it like the green Bitcoin, which I think is pretty spot on in terms of branding. But people who sponsor regions, maybe they're solar farm operators, maybe they're governments who are trying to accelerate the transition, maybe they are utilities who are trying to bring more power online. The math is such that the floor that you would sponsor a zone for would be just like the price of the carbon credits. Like say you're like an unaffiliated government, and you're just like, look, we're going to sponsor these zones, we're going to get the carbon credits, we're going to trade them, or we're going to retire them. Like that would be probably the minimum you would pay for a zone. the maximum would be, someone who's like a self-interested solar operator who has a power purchase agreement negotiated, who wants to buy or wants to get more emissions into their region. And the ceiling that they would pay is like the carbon credit value plus the value of the emissions, which are based on the value of the buybacks that happen in the system. And it's growing incredibly quickly. I mean, there's a lot of exciting stuff in terms of more power that's coming online in the power purchase agreements that they negotiate. But I mean, it's one of the most ambitious, largest TAM. And frankly, the founder is amazing too. The founder is David Vorick. He's really kind of cut from the cyberpunk ethos of, he was mining Bitcoin in 2012. He started SIA. And now this is his next project. And I mean, it's super, super bullish. And energy is going to be a great next market for crypto. It's fragmented, it's localized, it's liquid, it's always on demand. These are kind of the properties of things that really get us excited. And I think it's going to be the number one DePIN app for a long, long time.
Yeah, just to put a capstone on it, a DePIN is definitely the category that it's in. I think energy is maybe a little bit bigger than just DePIN, in comparison to the networks that currently exist. But Glow, for instance, is already the highest revenue generating DePIN category by a large margin, and that's prior to these new farms coming online.
That's huge. I don't know much about the solar market in general. Like, why, I guess if you're looking at the wide world of energy, why start with solar as opposed to something like, I'm probably asking really stupid questions here, but why solar versus wind versus other categories?
So what I would say is that everybody kind of has their take on, which power source is going to be the most important. And I think the right answer is it's not just one, it's actually a portfolio. And what ultimately we need to get to is being able to have high baseload energy, but also a high mix of renewable energy. And the two methods of getting basically to those places is, in our view, and now the Department of Energy is coming out and saying the same thing, is a mix of nuclear and a mix of solar. Wind is pretty strong, but it is not as power productive as you would have for a cost perspective as you would have with solar. The thing about solar, which is amazing, is in the last 5 years, the cost of solar production has gone down 90%. In the next 3 years, it's expected to go down another 90%. So all in, it's 99% less expensive if you're talking about, the production of solar in 2026, 27. And so it's kind of like you're riding the wave of like the equivalent of Moore's law in energy from a production perspective. And what you have with solar, and one of the interesting tidbits, being in California, at noon in California Pacific Standard Time, 100% of the energy that you're pulling from the grid is from solar. And then which is kind of an amazing fact in and of itself. But during daylight and during daytime, a lot of places will rely pretty heavily on solar. Obviously, you can't do that when it's cloudy or when it's at night. And so you have to rely on other sources like, in current standing, it's Diablo Canyon, which is a nuclear power facility in California. Then there's also a lot of natural gas. Natural gas is technically a clean energy. It's not a renewable energy, but natural gas is much better than coal. Nuclear is much better than natural gas, and solar is renewable and prevalent. And so there's a lot of kind of tailwinds, I would say, from an energy perspective. You've actually started to see this, to go back to elections. It's become a bipartisan issue in that the current administration has put the current Department of Energy has put a mandate of having 200 new nuclear power stations in the next 5 to 10 years, or at least permitting them and starting the process. They take about 7 years to build. And even Elon has come out and said solar is the future of energy just because of the cost and the direction of where solar is going. And so our view is that energy and being able to be energy secure as a nation or any nation is going to be a mix of probably nuclear and solar as the future of energy.
The last thing I'd say on that is like solar is the only form of energy that scales at the pace of crypto. I mean, you can deploy gigawatts of solar in months worth of time. A nuclear power plant that's a gigawatt takes probably 10 years to develop. Same with a nat gas plant, maybe a little bit less, like 5 years. And so the cost and the speed of solar is kind of purpose built for crypto. And there was a huge crash in the solar industry over the past 5 years where people offered to buy back the solar panels, and like the cost has since come down so far that doesn't make sense. And a lot of people have been hurt as a result. But the kind of reforming of the solar industry with an order of magnitude cheaper panels is the next step forward. And then after that is batteries. But frankly, batteries are not grid scale yet. Like you can do Tesla Powerwalls for your home, but really kind of the point of Glow is like we're going after the commercial electricity market first. And that seems to be just a much more palatable market in terms of, you don't have to fight the hand-to-hand combat of going door to door, signing people up for net metering, signing people up for, installing their own solar panels. Because that's a lot of how the original solar operators crashed in the first place.
Maybe final question for you guys here, and then that'll lead into our second story about Jito. But what do you think about with these I'd be curious what was behind the decision to actually, run and operate your own field of solar panels. And I'm very curious just in general about in these infrastructure networks. It almost feels like dog fooding your own product a little bit, so to speak. Like, how do you just walk me through that decision?
First and foremost, there's an element of wanting to be participatory in the network and support the things that we invest in. But ultimately, each of these, whether it's a direct investment or if it's investing in building out and operating solar farms, we have to look at as independent investment opportunities and evaluate them as such. And obviously, we wanted to do the investment that closed well before closing of the solar farms, but the economics of this ecosystem are extremely powerful. And that I think is kind of the unlock here, where we built the largest computer, which is Bitcoin. We've built the largest database, which is Filecoin. We should be able to build the largest solar network. And this is the network, this is the capability that Glow is going to enable. And for the first time ever, you have the incentive model where if you're a government or you're a company that wants to contribute to solar, you can directly put money in that directly ties to the production of new solar in a specific region. Whereas right now, the best thing that you can do as a government is say, hey, I'm going to give you guys some tax incentives. Please maybe go build something. But it's like, well, you'll be able to recoup some of your cost once you're done. This is like direct incentive, solar as a service.
We're going to need to get you guys, Vance, we're going to replace that hat with a construction hat for next time. And you can, like that'll look good on you guys.
One last thing.
Rajasthan, India is far away. By the
I was going to say, what's the flight like? Is there a direct line?
It is a bit of a trip. Let's see if I can get this up.
What's the weather like in Rajasthan? Is it? Imagine it's a little toasty during the summers.
Yeah. Desert. It's right on the border of India and Pakistan, and so you can imagine it's like eastern Pakistan, western India.
So like a couple slides from this presentation I gave to some allocators last month. This is the energy mix of India today, and there's like a bunch of things that drive power growth. One is like AI data center demand, which basically every country wants to participate in. One is like the modernization of economies. So like, you need more steel for a modernizing economy. You need more energy to produce that steel. And then the really interesting thing is like one of the things that's driving additional electricity consumption in India is just that it's getting hotter and people want air conditioning. And, in India last year, electricity use for air conditioning jumped 26%. And that is what's driving a lot of their electricity needs. So like this is David and the team in India, field dreams.
Let's go.
And this is the
that's the first solar farm we built.
That's our first solar farm. That's the 4 megawatt, the 16 megawatts coming on in probably a couple of weeks. But like, it's so bullish that like we're turning tokens and incentives and crypto flywheels into real infrastructure, and that real infrastructure is revenue generating. And then Glow, just like green Bitcoin. But those are kind of the really interesting things for me, at least. And we don't need to talk too much more about Glow. I think, frankly, like the token is not going to be out for a while. Like we're focused on making sure this is really, really compelling. We want to get, gigawatt on by, next year. And so we have a lot of work to do, and capital will obviously be a part of that. But we've been pleasantly surprised with people coming out of the woodwork and, in the existing solar industry and saying like, okay, how do I stand this stuff up?
It's very cool. I think the reason that DePIN appeals to people as a category is that there just is a difference. Software is great. That's kind of what 99.5% of crypto is, but actually having something real and tangible in the real world is just cool.
Last thing I'll say on this is one of our kind of partners from the LP side. We were telling them about this, and he goes, yeah, and they have a ton of different types of LPs, and he's like, yeah, it's really interesting. The crypto LPs that we work with, they just really care about making money, but the climate LPs that we work with, they don't really seem to care that much about making money. And this is the first time where I think we can combine the two and have climate, but also making money. It's like, yeah,
which would be amazing. All right. So speaking of dog fooding, so Jito just they started taking they put their initial caps in for the restaking product, and they hit them, I believe, within like 12 hours or something like that, or some very short amount of time, which is unsurprising to me. We talked about Jito on last week's Roundup because there's a proposal which is now live to take a rake on tips, which would be redirected to the DAO. But one thing that we didn't talk as much about, and I would be curious to get your guys' take on, is the thing about Jito that I find super interesting is, one, it's a very small, very high performance team, but two, they have all these super interesting product lines. They've got restaking, they've got MEV, and they've got liquid staking. And there are so many synergies in between all these products that haven't even been explored yet, right? Like, I don't know if they could do something like this, but you could imagine, what if you just redirected the tips from their MEV product and added that onto the LST yield? I mean, just right there, that's a structural advantage that no other LST could compete with. And they could do the same thing with restaking, right? They could just funnel that yield towards the LST and be dominant. I mean, the sky's the limit in terms of what they could actually do, which is super cool. And the other thing about them is, Solana, it's an integrated chain, right? So there's a lot of stuff around the MEV parts of that chain, which probably could be decentralized in the same way that I think people were initially very excited about Eigenlayer on Ethereum. And they're like, hey, maybe we could take some of these sidecar off-chain solutions like MEV Boost and make it more decentralized through restaking. I think there's a huge opportunity for Jito to essentially do that on the Solana side. And I don't really think it would make sense for like an Eigenlayer is just much more Ethereum focused, and Jito's kind of the Solana solution, right? So I see, Vance, you got a chart here is this Jito Sol?
Look at this chart.
14 million Sol.
I mean, we work with the Jito team pretty closely, and their goals are like 50 million next year, 100 million the year after that. And the chart that I've seen people memeing on crypto Twitter is Jito Eigen, which I think like it's going to be interesting to see if this kind of, I mean, our thesis on Jito is that it'll be worth Eigen plus Flashbots plus Lido, which is probably like 10 billion in FTB or something around that. They need to get to like 50 million of Sol, and they need to kind of probably deploy one or two other business lines. But like Jito is the same thing as Solana in our mind. It's just vertically integrated, and I don't know, like what else is there to say other than they're just absolutely crushing it.
I was going to say the thing that I would say is the team is one of those teams that you're just like, that is exemplary of where you want every of your portfolio teams to be. And obviously Lucas and everybody working on it, but just like the way that they navigate the idea maze, and also the speed at which they operate, I think that comes from a couple of things. Obviously a clear direction of where things are going, but also, and we've said this before, but like a deep willingness to chew glass when things aren't going great and not have it rattle or shake or change the direction. And when you have that, like there's a lot of faults in experiences at companies, but one of them that I think is with Dropbox when I was there, is that the founders kind of just like fell ass backwards into success. And I don't think that they recognized kind of like what got them there. And so therefore they weren't able to navigate and make similar decisions that would lead them to the next level. And obviously it's been successful. It's a publicly traded company, et cetera, but it is what it is. But I think when you know what has gotten you there, and kind of the direction that you need to go, and that clarity of mindset is it's a unique property.
Completely agree. And I should caveat, we caveated last time, I am a small but proud bag holder in Jito. You guys are slightly larger but proud bag holders in Jito. So just as a disclaimer there. But yeah, I mean, also I've got the receipts. Like, Lucas has been coming on the pod for years. When I was kind of digging around Solana a couple of years ago. He was one of the guys that I talked to about it. That was like, no, this is real. Come look. And yeah, I think they've actually, you know what was one, I'd be curious to get your guys' take on this from the investor side of things. I was talking to a buddy of mine this week about this, where the Solana ecosystem of founders is still relatively small. Like it's a little bit thinner than I would expect. And if you told me, like if you just showed me the chart of Solana, starting a year and a half ago, what the ecosystem looked like then versus today, obviously there's been a big sentiment shift and everyone knows Solana isn't going away. And there's all this talk about Ethereum versus Solana, but there hasn't been a huge explosion in terms of entrepreneurship. There have been new products that have launched. Grass went live this week, et cetera. But I'd have just expected more a little bit. And I would just be curious, am I off there? Do you guys feel the same way? Is there any explanation for that? Or what do you think about that?
Solana is very concentrated with pumped out fund activity. So I think like the bet on Solana is kind of like a bet on pumped out fund at the moment and kind of the durability of meme coining. And that's been like, I mean, it's always kind of chunky in terms of app success. Like there's not going to be 100 successful apps. There's always going to be like 2 or 3. But I think, really kind of like where we see the users are in games, off the grid, pixels, like there's a handful of things that are really working on the gaming side. They're not necessarily based on Sol.
None of them are.
Yeah, the next leg up for Solana is basically like building out a real lending ecosystem. Like the lack of leverage, the lack of stable coins, it's all kind of interrelated. And if that's probably the clearest path forward for Sol. And you definitely want kind of like another leg of your economic stool to be unrelated to meme coining. Like I think meme coining probably persists in the bull market and probably does pretty well. Like maybe it doesn't do quite as well given just like there's going to be more of them, there's going to be less of a graduation rate, etc. But I mean, Solana's next step is like it needs to build out like real DeFi in a lending context. And like I think Ethereum can be understood as like a lending chain. Lending builds stable coins, which builds swaps, which builds activity, which builds all these ecosystem projects. And that's kind of my take on Sol. Like, how we play Sol is, from a perspective of like, we want to own the best ecosystem projects. And right now it's like Jito and Pumped Out Fund are probably the 2 best ones in the ecosystem, but it's kind of circular. Like Jito relies on Pump for its fees. Solana relies on Pump for its fees. It's like, it just needs probably diversification is probably the next best thing for them to do.
Hey everyone, this episode is brought to you by Index Co-op and their new product, the Leverage Suite, which I highly recommend that you check out. Click the link in the bottom of the show notes. Now, disclaimer, whenever it comes to leverage, do your own research. This is not financial advice, all of that good stuff. Don't bet more than you can lose. But if you are going to lever up, you might as well not pay an arm and a leg and save a ton of money and use Index Co-op's Leverage Suite. So the way that they actually achieve these savings is pretty cool. They leverage the power of money Legos, DeFi, in this case, Uniswap and Aave. So the cost of carry for this trade is actually based on the funding rate of Aave as opposed to perp dexes, which tend to be much more variable and higher overall. Additionally, perp dexes will also charge you usually based on the entire open interest, so the leverage exposure that you have as opposed to just the amount of money that you put in, which is what Index Co-op is doing here. And the result of what you get is just an ERC20, which gives you something like 2x ETH. So if you want to lever up and you want to save money doing it, I highly recommend that you go check out the Index Co-op Leverage Suite. Very, very cool. Thank you very much, Index Co-op, for making this episode possible. Hey everyone, this episode is brought to you by Supra, the new blazing fast, vertically integrated L1, which helps you scale your dApp. If you are a builder, you're probably dealing with some combination of cost, complexity, and fragmentation of existing solutions. So if you're building over an ETH L2 land, everything's feeling a little bit fragmented at the moment. And if you're building in Solana, everything is fast and on one layer, but maybe you're limited in terms of what you can do with your AppSpace. So Supra is rolling out a new product called Supra Containers. So you can head over to supra.com/containers. To learn more. They offer dedicated customizable app spaces running on Supra's 500,000 TPS Layer 1 blockchain. That gives you complete control over gas tokens and fees. So some cool things you can do, you get the freedom you can use your own token, create local fee markets, or even go gasless, whatever you want. So this product isn't live yet, but because you are a faithful listener of Bell Curve, you get notified first. So head over to supra.com/containers. Thank me later. Hey everyone, this episode is brought to you by Fuel Labs, who's unveiling their new high-performance Ethereum L2 Fuel Ignition. Many of you know Fuel as the launcher of the first optimistic stage 2 rollup on Ethereum with Fuel V1. And now they're launching Ignition to address some of the creeping centralization concerns around some L2 architectures today. And if you like nerding out about the tech, there's a lot of reasons to get excited about Ignition, including how they solve state sustainability and performance execution. They have this UTXO asset-centric architecture that's very, very cool. But there's a lot of other reasons to love it. Super easy to use. You can either use a Fuelet wallet or your existing Ethereum or Solana-based wallet like Phantom or MetaMask or whatever it is. There are cool apps that you can experiment with. And again, like I said at the top of the program, they're launching phase 2 of their points program. So click the link at the bottom of the show notes, head over, start having fun on Fuel Ignition today, and just tell them that I sent you. I've got a question for you guys. Raydium has been doing very well recently, the exchange, and I've seen a couple takes that this is great because this is reflecting value and Raydium's getting re-rated based on its fundamentals. There is another reason why Raydium might be trading the way it's trading, which is Pump.Fun doesn't have a token yet, and everyone wants a proxy for that. And so I'm curious, those are the two explanations that kind of make sense to me. I'd be more in the Pump doesn't have a token, and this is the proxy for that. Where do you guys?
They also leak so much value to Raydium.
Yeah.
Because the LP automatically graduates from the bonding curve to Raydium. If that stops happening, like Raydium's volume will go to zero.
I was going to say that Raydium is another one that's in the symbiotic relationship with Pump, just because of that graduation process. And I think Raydium, it depends on what the future plans for Pump are. But let's say if Pump was to build its own exchange or its own capability similar to Raydium, I think that would be tough for Raydium. But it's unclear as to and this is always what happens. You get a beachhead and then you're like, okay, well, which other places do I want to go? And basically which other, symbiotic relationships do I want to crush? And that's probably where Pump is right now.
There's two interesting parallels from Ethereum here where there's an interesting growth story between Lido and Aave. Steth and Aave were very symbiotic with one another and they kind of fed into one another as the core use case was looping. And so Steth was the dominant collateral there. It's good for Aave, good for Lido. There's another example of, remember when Axie was doing super well and it tried to launch its own DEX, which is the opposite, right? It's, hey, we've got a beachhead. There are a bunch of people coming to Axie. Why am I paying so much money? Why am I leaking so much value to this outside DEX? I'm just going to vertically integrate, create my own DEX. And I guess it depends on which way Pump.Fun wants to go here, right? They probably have the leverage in this relationship. So it just depends on what they want to do.
It is an interesting thought experiment. When Pump.Fun, if they launch a token, it will generate more activity on Sol temporarily, depending on how they incentivize things. But Sol right now is a bet on Pump.Fun from a fundamentals perspective. Do you just want to buy Pump.Fun? And I think it's that argument never really applied to, maybe it applied to kind of Uniswap, but the liquidity.
There are 5 things that you would apply in the DeFi category but you would buy ETH because it's proxy for on-chain DeFi.
Right. So it'll be interesting to see the extent to which a Pump.Fun token is value accretive or dilutive to Sol. Because it'll certainly split a lot of the bid. And it's funny, if you look at, the Sol fees versus the Jito fees, they're pretty much equal. And then you look at the Pump.Fun fees and it's those are kind of equal as well. It's a third if you added it all up. And I think, Pump.Fun, let's say there's a token, you have to take a view on whether meme coining is durable for that to be a logical investment. And then I think Sol, you kind of need to take a perspective of is meme coining durable and is Sol kind of a prototype money similar to ETH? It'll be interesting to see once the applications start to generate high FDVs, and maybe Jupiter is already a case study of that happening a little bit.
Other thing I would say is the bet on Sol would be that, and Jito to an extent as well, is that the ecosystem can move past just having meme coins. Totally. And this is what Ethereum did as well, which obviously there's more things than DeFi now, and if you look at sort of the burn metrics, it's not just DeFi that is creating the burn at this point. Base all the L2s, but the ecosystem around Solana is going to have to transition from pump only to pump and other things.
Yeah, I agree. I think I mean, we've talked about it on this pod a lot of times. I'm a little torn about meme coins in general. Even if you look at the NFT meta, right, that still lasted longer than people thought it was going to. That was like a 2-year journey, right, to go all the way up and then all the way back down. And generally, like even like Wall Street looking at Coinbase's business has been like these fees are going to compress, and here we are 11 years later, and the fees are still pretty high if you're a retail trader on that platform, and they've been much stickier than everyone thought. On the other hand, there's such a high supply of meme coins that it's still pretty hard to attach like a great fundamental reason for why they're going to stick around. So I don't know. I'm very torn about these. I don't have strong opinions.
Two things. Number one, NFTs lasted, I would say, a year. I think meme coins have higher velocity because they're more liquid. So that's one thing. Orthogonal is apparently Blob's been at their target for 2 days on ETH. So that's like starting to work. And that's kind of an orthogonal point. The third point on Coinbase is, dude, this is the most volatile stock I've ever seen in my entire life. It's down 12% today. Like, I mean, it's also traded almost $1 billion in volume. Like,
it's down 12. It's down 12%. This is my favorite part. It's down 12% off of like lower than expected Q3 numbers. But as we're literally about to go into a crypto bull market.
No, this is all right. Let's go through. So Coinbase did their earnings call yesterday, which is always kind of fun to go through. So if you're following along on video here, they break out. They had total transaction revenue of 572.5 million. Their subscription and services bucket was just a hair underneath that at 556. The bulk of that comes from their stablecoin revenue, which is their partnership that they have with USDC, and blockchain rewards, which is their staking business. So overall net revenue was just north of 1.1 billion, 1.128, with slightly positive net income. And their metric that they like to talk about is adjusted EBITDA in general. And honestly, I listened to the earnings call. I made it like halfway through the analyst questions, but they were very focused on unsurprisingly regulatory stuff. I guess like a couple interesting things to call out is they talked a little bit about Base, which Base is actually putting up way more numbers than I thought. The other interesting thing is they saw a huge jump in terms of stablecoin pair trading. So they have this. Coinbase has a little bit of an incentive they get a different percentage of the rev share of USDC based on something. I believe what it is custodying USDC on the platform. But what they want is people trading USDC and holding it on Coinbase. And so if you use Coinbase, you see you're getting like 5-something% to just hold your USDC on Coinbase. And they cite it. It's a sales and marketing expense, which was slightly higher than expected. So they're basically just paying you to do that. They also don't really charge a lot of fees on trading stablecoins. And so what they're doing is it's just a trade of transaction revenue into like the stablecoin line item. And they view that as more durable. They know Wall Street wants to see it like that. But they also, there's some pretty crazy statistics about Base here as well. I think they called it out somewhere. Well, I look for that. The other big thing was they're announcing a $1 billion share repurchase program. So I don't know if you guys saw that or if you guys have any thoughts on that, but I thought that was interesting as well.
Look, the one thing I'll say on share repurchases is the only time when companies buy back their own shares is when they think that they're undervalued.
Yep.
Yeah.
Yep. I mean, they did have a big miss on earnings today or revenue today. That was what drove the pile drive the shares. Like, dude, Coinbase and levered Nvidia are down the same amount.
Yeah.
I'm sure the people holding this are just like, what the fuck is going on? And the chart doesn't look terrible, but it's just a bump.
The thing that I will say, I mean, the comment that I was going to say about Coinbase is I still think that it remains to be the most misunderstood like stock on Wall Street. People who are just like looking at this as if it's, revenue guide, like we exist in a cyclical industry. You have to compare cycles, and we're not talking about quarterly cycles. We're talking about like 4-year cycles, and that's the fundamental miss, I think, here. If you're looking at, okay, Q3 2023, that was pre the announcement of the Bitcoin ETF, or the expectation of the Bitcoin ETF, just because of the Genesis lawsuit happened in October. Like nothing was going on last year, so we're up 100% on the top line. But like we guided to something that we thought would be higher. Nobody expected that the election would put a curtailing on trading activity. But if you think about this in terms of 4-year or 5-year cycles, it doesn't matter what happens right now when we're going into 2025.
No. The other thing too that I feel like analysts miss on this is even just how tied transaction volume is to just like sentiment, like overall sentiment in crypto. And I really feel like as a basic rule of thumb, sentiment has not been good this last quarter. And you could probably just assume just by being in like the trenches and on crypto Twitter, like, all right, I think you could use that as a pretty accurate gauge whether or not they're gonna miss or beat their transaction-based revenue target.
And
And it
price
lags.
begets narrative, begets
Yeah.
price,
Mm-hmm.
always. And the reason why price has been dwindling is it's not because people are losing faith in crypto. It's because people have been sitting on the sidelines since June, knowing that we're going into one of the craziest election cycles that we've seen in decades. And nobody knows which end is up in terms of the polling, the trajectory, who's running. Like all of this stuff is happening in real time. And so everybody, at least that we talk to, is just like, we are sitting on our hands until November 6th, and that's when we're going to get back into the market.
Totally.
And so what that means is from like a charting perspective, from a volume perspective, or from like a price action perspective, everybody's like, oh, people are losing faith in crypto. It's like, no, we had massive government selling in July and August to a low liquidity environment because nobody wants to be buying right now because they're waiting for the election to happen. It's like a very simple equation of flows. And I think that is like we've over rotated to like being negative. And I think that what also that means is that we will over rotate again to being positive.
Completely agree. They mentioned on the earnings call a couple times. It seems like they're focused on a couple of different areas. One is their international and derivatives trading. Two is CB BTC, which is still super early days for that product, but they're very excited about it. And stablecoin and payments. And I actually just want to read you guys an excerpt here because I knew Base was doing well. I just didn't have these numbers off the top of my head. In Q3, Base, our Ethereum L2, solidified its position as the leader in on-chain activity among L2s. Base is now the number one L2 in both transactions and TVL. The number of transactions processed on Base grew 55% quarter over quarter in Q3, surpassing all other L2 networks and 4 times higher than Ethereum over the last 30 days of the quarter. And they kept the median fee per transaction at 1 cent, which is pretty crazy. I knew that Base was doing extremely well, but I didn't realize they were that dominant amongst L2s, which is super impressive. The other thing that they're doing, which is a long shot, and who knows if it's actually going to pay off, is so Coinbase has I believe it used to be Coinbase Cloud. Now it's just their developer platform. They announced something a little while ago. They're making it very easy for you to come in and spin up your own AI bot, which is very interesting. So what that tells me is they see a bunch of volume in the future and transactions coming from people spinning up AI bots. And I think they're a little ahead on the trend of like, it doesn't matter if it's a bot or a human, activity is activity, and they want people to spin those AI bots up on Base. So not going to appear in the next earnings release, so you probably wouldn't see that now, but it's a pretty cool forward-looking bet for the future. So they're doing well. I think they're doing a good job of trying to be ahead of the curve. And this is I would be curious to get both of your guys' opinions on this because I was just having a debate about this with a friend this week. But when you think about Coinbase versus something like Robinhood, which of those platforms do you see onboarding more normies? Kind of they have roughly the same amount of monthly active users. So there's a funny discrepancy. It's like Coinbase has something like 100 million funded accounts, but they've got roughly 9 million monthly active users. Robinhood's is much lower. It's like 26 million funded accounts, but they have 11.5 million monthly active users. So just US based, probably slightly more users. Like the monthly active feels like the more important metric there. But yeah, I'd be curious, how would you evaluate the approach or
I think maybe one way to think about it is there's sort of like a spectrum, I would say, in terms of product, and then there's a spectrum in terms of like capabilities. And I think if we were to think about like where each one of these companies spikes, is like Robinhood has the better product in that it's mobile, it's integrated into all kinds of different other financial equations. Like I got a notification, I think we were talking about it at some point, maybe last week. I got a notification from my Robinhood app to like let me know that I could trade contracts for the election results. Like they have their own, poly market equivalent. Like they're doing things, but it's a lot of different things that are not crypto specific. And within the crypto ecosystem, you can only do certain things, which is like buy, sell certain assets. Whereas Coinbase is less in terms of product. The mobile experience is not as good, but what you do have is more capabilities with the Coinbase wallet experience where you can actually like go in and, interact with DeFi, let's say. All of that I think is positive, but what you have also is the geographic overlay. Crypto right now, frankly, it's not very actively happening in the US. All of the activity is overseas, whether it's Asia, Europe, South America, et cetera. That's where all the activity is happening. And so that puts Coinbase at an advantage given the internationalization.
So just like to push back on that a little bit. So public.com, their most traded and custodied apps or assets are MicroStrategy, Bitcoin, and ETH. Robinhood, most of their users are trading crypto. Like, I think it's a smaller but more committed set of people in the US. But what you don't have is like that, I'm putting $5 into this from every random, taxi driver, Uber driver, whatever.
Right.
Asia, it feels like it's more dispersed. And you do have that kind of law of large numbers working for you.
Yep.
You mentioned so the other thing too is I think that Coinbase, I don't know if this is purely messaging to Wall Street, but I really believe it. I think you can see it in terms of how they're allocating resources and what they're talking about. They're moving, they don't want to be an only transaction-based revenue model. They actually want to build out a lot of the, like this whole services and subscription bucket, which to their credit, they've done a phenomenal job of scaling over the last 18 months. And, there's a lot of internal focus on a staking business and stable coins. And they're going to be much better positioned to win that type of revenue. And it wouldn't surprise me if it'll take a while, maybe it's a decade or something like that, but we might not be thinking of Coinbase primarily as an exchange on some time horizon. Whereas I don't really see that for Robinhood. They're great on product. They're much more the Web2 product stuff. They're crushing at Robinhood more than Coinbase, but what they're adding is prediction markets. It's all exchange transaction-based revenue. So I think they've just got a slightly different revenue mix. It's probably going to be permanent. Maybe just to close here, what do you guys think of this Michael Saylor $42 billion Bitcoin buy? This is nuts. I mean,
it's like Babe Ruth. I think of it like Babe Ruth walking out on a home plate and just lifting his bat and pointing to the center field. Like that's what Michael Saylor just did yesterday.
I mean,
oh my God,
he's the GOAT.
Yeah.
He's up 8 billion that he already round tripped once, but now he's back up again. It's there will be stories written about him kind of either way, but I don't know where he gets 42 billion. I would say that has like a probably 2% chance of happening.
No, I mean, look at what happens every time they go out to raise another billion or two or three. It fills within 24 hours, and it's like basically 0% interest. Like he's able to get it's also over 3 years. So let's say he's going to do like 13-14 billion dollars a year, and if it's assumed to be evenly spread. But imagine Bitcoin's ripping, and I don't know if you guys have also been following the ETF flows over the last week. Like we're talking about like close to $1 billion days right now. And what MicroStrategy provides is a very clean way of getting leverage on that Bitcoin. And so I would be willing to bet that there's just ample demand, especially as we're going into 2025.
They also rolled out a 2x levered MicroStrategy product yesterday,
Which is insane.
I mean, let's. I think we can end it there because Michael, you got to hop to the Discord, and I got to hop to a call with Rune.
Fellas, this was a good one.
Recovering, by the way, these assholes finally stopped selling, and it looks like we're on a good path. So more updates soon.
Go, baby. All right, fellas, this was a fun one. I'll let you go. Cheers.
Bye.
See you next week.
Later.